Islamic banking scene in Pakistan has been rapidly growing, and if you look at the market share of Islamic banks today over the total banking assets, it's around 13%. And we have seen the emergence of 5 standalone banks, and 17 banks have Islamic windows or Islamic banking windows. And we will see this momentum growing over the next few years. The area that we need to focus in the next level of evolution is to also grow the Islamic capital markets, or what we call the Sukuk market. If you look at Pakistan, the Republic of Pakistan has issued Sukuk in the international markets. The sovereign Sukuk has been well received, and we continue to see appetite for more issues from Pakistan. But unfortunately, we have not seen the success of the government of Pakistan in tapping the Sukuk market being followed by corporates in Pakistan to continue the evolution of the Sukuk market by tapping the Sukuk market internationally. So we are seeing corporates in Pakistan issuing Sukuk in the local currency market. And the local currency Sukuk market is evolving, and we hope that one day it will reach a significant size, like what we see in Malaysia, where almost 70% of bond issuance in Malaysia is structured Islamically. In Pakistan, it's still a very low number, and the corporates need to really support the growth of Islamic bonds or Sukuk. This will require a few incentives from the government. We can learn from the experience of Malaysia, where the Securities Commission has been spearheading the growth of Islamic capital markets. The objective behind the growth of Islamic capital markets is, all things being equal, investors, whether conventional or Islamic, would be open towards buying an Islamic instrument called Sukuk, because they will be getting the same risk appetite or same credit as a conventional bond, and they will get a similar return, but it will have a greater liquidity because the Sukuk instrument will be bought by both conventional and Islamic investors. So if a corporate is trying to tap a market, and if they see that they can attract 2 sets of investors, one conventional and one Islamic, they naturally would tend towards an instrument which can capture both, as opposed to issuing one conventional and then doing another Islamic to cater for the Islamic market. Therefore, in Malaysia and many other markets, we are seeing more and more corporates doing Islamic instruments to capture both the markets at the same time. So we hope the similar trend can continue in Pakistan. And the regulators and the policymakers should give some incentives, because there is a steep learning curve for the corporates to basically understand the requirements of the instrument and prepare their company to issue these instruments. So some form of tax incentives could be offered for at least 3 or 5 years to help the customers to move towards the Islamic instrument. At the same time, the regulators must come up with a medium to long-term plan where they must, in tandem with developing the Islamic instrument, must also develop the buy side of the industry. We can obviously create more instruments to be issued in the market, but if there's no demand, there's not sufficient demand in the market, these instruments will not flourish. So on the institutional side, what we have seen in successful markets like Malaysia, Hong Kong, Singapore, is the government has strategically developed the institutional investor base. So they effectively create growth in the insurance segment. So when insurance segment grows, when people start buying life insurance, education insurance, health insurance, these insurance companies will have funds under management that they need to invest in medium to long-term instruments. Now, how do we get people to buy life takaful, education takaful, and other different types of financing which are longer in term? In Malaysia and many other countries, we have seen the government actually helps this mindset shift through tax incentives. So a certain amount of taxable income can be allocated towards these investments by deducting tax from this investment. So if you say a certain amount of the income can be, if you use this income to buy insurance, then it's tax deductible. people will buy more of this insurance. So when they buy more of this takaful or insurance or investment products, you suddenly see the institutional investor base grow, and those institutions then will demand for longer term papers. So this is basically a natural cycle, demand leading to more supply of the instruments. The supply will then create more traction in the market, and that will lead to development of your infrastructure needs. So today, if the government wants to build a toll road or wants to build a port or a power plant, often they find the liquidity is not sufficiently available in the local market. So in Malaysia, for example, you can do a power plant, you can develop a power plant and raise funding entirely from the local market for 20 years. So you can do 20 to 23 years financing, the 3-year construction period and 20-year payback period entirely in local currency through the Sukuk market. This happened because the government in the last 20 years have been consciously developing the institutional investor base. If your pension funds are large, today the Malaysian pension fund has allocated about $25 billion for Islamic investments alone. Can you imagine the amount of demand now available? So corporates, when they see there's 25 billion already ring-fenced for Islamic investment, they now will be looking to issue Islamic papers because they know there's 25 billion worth of investments available for Islamic instruments. So there must be a proactive approach from the government to develop the buy side of the industry. A lot of government make the mistake of rushing to build the sell side. You create more institutions to sell, more instruments to sell, but if you're not able to find the buyers to buy, then it becomes a premature growth. So we need to see how Pakistan can grow the buy side of the story, and this has to be through a medium to long-term plan where you use tax and other incentives to influence people to invest for long-term in local currencies. It could be mutual funds, it could be private retirement schemes, it could be takaful for medical, for education, for life, and these will then automatically open the buy side. And the benefit for the government could be numerous. One is you have sufficient liquidity within the local currency market for your government, infrastructure, and corporate funding requirements. So you don't need to rely on offshore funding. And because they are local currency, you are naturally hedged. Your funding is in local currency and your revenue is also, there's a natural hedge between your funding side and the revenue side. And more importantly, there are investments variety available for the local population. So that will also, over time, build the wealth of the society, and you can then build a more equitable society. So the Sukuk market is a great platform to develop. Today we see the Sukuk industry is still at a rudimentary stage, where often it is shorter term, the tenor is rather short, and is principally a senior unsecured corporate issuance. What we want to see is more project finance related issuance. So the funding is ring-fenced to a project. It could be power, it could be water, it could be oil and gas, could be transportation. So it is ring-fenced to the project, and the project cash flow will pay back the investors with some credit enhancements in order to get the right rating. So there's a lot of work to be done, and I think Islamic finance can play a key role because Sukuk has a natural fit to Islamic finance because often there are assets or projects backing the instrument itself. So given these requirements, I think a lot of effort needs to be put in place to develop the Sukuk industry. And with the help of the regulators and policymakers, I think Islamic finance industry can play an important role in becoming the engine of change for the growth and development of Pakistan.